Well, hi guys, welcome to this Money Control live stream. You're watching Opening Bell with me, Nandita Khemka. It's a Friday morning, and the Bulls are perched on a strong wicket. Although the Gift Nifty is hinting at a mildly lower start, but we've managed to navigate all the global challenges. We've seen Wall Street struggling the entire week, but we have managed to hold our ground. And the Bulls, would be looking forward to, end the week with the seventh straight day of gains. Seventh day at the crease for the Bulls, hopefully. But mind you, last Thursday till yesterday, we've seen almost a 2% gain for the headline index. Of course, last Friday was a holiday, Independence Day holiday. So Thursday to Thursday, the gain is almost 2% on the index. We are looking to end the week on a strong footing. Second straight week of gains, if at all it comes by, looks likely. So yes, we are poised on a strong wicket as of now. As I mentioned, Gift Nifty hinting at a mildly lower start. Let's see how things really pan out. But lots of stocks as well in focus. The likes of Vedanta, which announced its second interim dividend for FY26. You also have a new CFO at HUL. We'll talk about that as well. And we'll also have a big market voice joining in later on in the show. Nikhil Khandelwal, MD of Systematix Group, to understand the setup and how things are looking post the reforms rushed by the government in terms of GST. So yes, lots lined up. All your stock-related queries will also be in focus. Keep them coming in on a live feed on YouTube. We will try and get them addressed by our experts as well. But before we move any further, quickly take a look at what the headlines are looking like at this hour. Stocks on Wall Street ended lower with S&P 500 posting its fifth straight losing day. In fact, it has been the longest losing streak for the S&P 500 since January. Now, there is a fair bit of caution ahead of the Fed chair's speech at the Jackson Hole Summit. In fact, even the Dow dropped somewhere around 150 points in yesterday's session. Asian markets, are trading mixed with Wall Street, following Wall Street's moves. The Nikkei was, of course, retreating for a third straight session. Kospi was looking fairly strong. And when it comes to the Gift Nifty, mildly lower. Let's see how our markets start for the day. Crude oil prices rise a percent, supported by signs of strong US demand and uncertainty around efforts to end the Russia Ukraine war. Coal prices slip as the dollar firms ahead of the Jerome Powell's speech at the Jackson Hole Summit. A group of state finance ministers rather, take the first step towards GST reforms. A high-powered committee recommends a two-slab structure with 5% and 18% as tax rates and 40% as a special rate. The proposal will need to be approved by the GST Council. And Hindustan Unilever names Niranjan Gupta as CFO designate effective 1st of September. He succeeds Ritesh Tiwari, who moves to London as Unilever PLC's global head of M&A and Treasury from November. Well, before we get on board our expert, quickly wrapping up the trade for yesterday. In fact, what happened really in yesterday's trading session, we did manage to shut up above that 25,000 mark for the second day on the trot, but 25,150, that happens to be a barrier now, the next barrier, so to say. We did clock in that level yesterday, but failed to hold on to those levels. In fact, we did come off somewhere around 70 points from the day's highs, but still, no complaints there because we did manage to shut up above that 25,000 mark. The Nifty, of course, gaining for a six straight session. We are looking for a 7-day winning streak today. And, if you look at the shares of Reliance Industries, it continues to be a support for the index. Broader markets, however, came under some bit of pressure yesterday. The Nifty Mid Cap Index ended the session in the red. But, of course, the theme of the day yesterday was the capital market theme. We saw stocks like BSC, Angel One also taking it on the chin after SEBI chief's comments on longer tenure for F&O derivatives. We'll ask our technical expert as well as to how much of a hit it would be for trading volumes, given the fact that weekly expiry could, in fact, be done away with. So yes, that's the one pocket that was in focus. Financial stocks continue to underperform. You have the Nifty Bank Index ending the day in the red. Pharma, however, staged a very good comeback. Mind you, entire week pharma was under pressure, but yesterday we saw buying interest coming back in the pharma names. In terms of individual movers, Ola Electric saw some bit of profit taking after a very strong move over the previous two sessions. And IDBI's bank was another stock that was up and about after the Perm Seki's comments on divestment, that divestment is on track when it comes to IDBI Bank. In terms of some changes to Nifty, some announcements that could come by today. Max Health and Indigo. These are the two counters that are likely to make an entry into the elite Nifty 50 club. But two stocks that could look at an exit, or these two may replace the likes of IndusInd Bank and Hero MotoCorp. These announcements may be made by the end of day today. But in terms of foreign flows, some bit of good news in terms of foreign inflows after days of sell-off. One day we did see buying, but then again successive days of selling. But yesterday again net buyers FIIs to the tune of 1240 crore rupees or thereabouts. DI buying support continues, 2500 crore rupees worth of stocks bought in the cash market. In terms of the futures and options queues, you saw the put call ratio falling to 1.09 vis-a-vis 1.28 in the previous session. And we're talking about the stocks that will be in F&O ban today. PG Electroplast, of course, made a re-entry into the F&O ban list yesterday, continues to be in F&O ban today as well. And RBL Bank is the other one. But Titagar Rail, that comes out of F&O ban today. But on that note, let me bring on board our guest for today. Joining me is Raja Venkatraman of NeoTrader. Raja, lovely having you on the show. We are poised for a seventh straight day of gains, and your 25,000 mark has been cleared decisively, so to say. Here on, what are the expectations for the next week, and how should one really be? What's the positioning like for today?
Yeah. Good morning, Nandita. Thank you for inviting me to the show. So, what I'm looking at is the market has been supported quite well, and over the last 2 weeks, yeah, we've broken the 6 continuous weeks of decline by following it up with 2 successive weeks of rise. And like you rightly mentioned, from last Thursday to this Thursday has seen some good tidings, but then there continues to be a very strong resistance zone around the 25,200. So I would say that that would be the next hurdle along the way. And every pullback will continue to be a buying opportunity because the trends appears to be on the positive side. But then when you are looking at today, yes, there are strong chances of today ending on a positive note. But then when you take into consideration August 27th, which is again tariff-based news that's going to come about. So this tariff hangover is slowly beginning to reduce in its impact. So one should not pay too much weightage to it. But yes, next week could be a week of a little bit of confusion. But then markets will tend to be on the positive side. Now, when you look at the indices, Nifty yes has reclaimed the 25,000 mark, but still that hurdle continues to remain. So I think that 25,000 and 25,200 will be two key levels to watch out for. So if bullish bias has to be given up, then we need a closing below 25,000. And if continuation of the bullish poise has to extend, then 25,200 would be the first level of resistance, and then their scope till 25,500. Now, to achieve all of this, we need participation from the bank Nifty. Now, this entire rally, as all of us know, like you rightly mentioned, that Reliance has been one of the strongest performers in the last few days, and with the Reliance AGM also coming up. So, a lot of positive news buzzing up around Reliance, and that's what is keeping the momentum high. So, now we can't have one stock rally, so we need other legs also to participate. So, yes, this rise is definitely encouraging, but then it is also a little sketchy because we are not having participation from other sectors. So stock specific action is what continues to remain the focus. But yes, the bias is definitely on the positive side. However, one should not get excited and hold long the position for a long time and continue to keep booking profits. That's what will be my message on the Friday morning.
Hmm. Okay, continue to keep booking profits. That's the message coming in from Raja. But Raja, just about 5 minutes to go for the markets to open. Since you're talking about being stock specific, what would your recommendations be for our viewers?
Yeah, so I would like to go in with a buy in TVS Motors. you could go in with a long at the current levels, have a stop at 3250 for a target towards 3350, and one could go in with a long in Qmains at around 3890 with a stop at 3860 for a target towards 3950. So purely as a it will be an intraday play, because I am seeing that the markets may encounter some bit of confusion due to the August 27th deadline, and also August 27th is a holiday at in the Indian market, so that's where the confusion could emerge, and the 20th being the expiry, so one should really take care while trading in the next
Hmm.
week.
All right, those are the recommendations. And of course, 27th, as you mentioned, would be the tariff deadline, and we are staring at a 50% tariff. Of course, that perhaps could be an overhang next week. But Raja, what about the SEBI chief's comments and the fact that they are going to come out with a discussion paper for longer tenure of derivatives? Weekly expiry may go, right? So how, what kind of an impact are you envisaging because of that? Because the bulk of revenue for the likes of BSC and discount brokers stems from weekly expiries. How would you be looking at these stocks, and what are your thoughts on how volumes will get impacted?
Yeah, the weekly derivative definitely is a good revenue generator for the broking houses. Now, what will happen is that as every regime undergoes a change and new strategies get evolved, I'm sure that we will have like how Bank Nifty. When it moved to the monthly, yes, there was a change, and then people came out with new set of strategies. So new set of strategies are going to be evolved, and that is the nature of the market. So as long as the overall perspective is there, and other exchanges are also coming up with different kind of tools and assets to counter this. So we should continue to experience. Yes, maybe there will be a reduction in all this is with an aim to reduce the unwanted volatility, but in the bargain, what's happening is that it may also curb the enthusiasm of participation. So that is something which we got to watch out for. But then when you take a look at the volatility, yes, the volatility may stem down, and people will have to resort to different kind of approaches as we go along.
Hmm. And what about online gaming? Of course, that also came out of the blue. The message from the government is very clear. They would not encourage speculation and addiction. Nazara Tech saw quite a bit of a sell-off. Of course, they will also be coming out with strategies to deal with this. So, how would you look at the names like Nazara and Delta Corp? Is it a clear avoid at the current juncture?
Yeah, the news flow is definitely negative, but then it is a statement that has been passed, but it has not yet been implemented. So yes, now it is 400 crore plus industry, and 2 lakh job employees at stake. So it's not something which is going to be happening overnight. So in such a scenario, yes, there is always a reaction, like when the news came of Ultratech or Adani entering the cable space, you did see the correction in the names like KEI, Polycab, but then they again came back. So market
Hmm.
news flows are a part of the game. So this will definitely bring a reaction. But yes, if you mention the stocks which you Nazara Tech and all those stocks, they have not been moving also in a steady manner. So the stock is more of an investment nature. So yes, if this news is going to be implemented, then that stock is an exit. But this pullback should not be considered as a buying opportunity.
Okay, pullback should not be considered as a buying opportunity, although even for other news flow and other sectors, we've seen stocks making a comeback. But of course, hold that thought, Raja. We are getting the first ticks. Let's see how the markets have opened up. It is a subdued start, but nothing to be worried about, right? Because last two, three sessions, we did see the market getting off to a very slow start, but we do manage to pick up momentum thereafter. So, holding on to those hopes. But it is a quiet start, but nevertheless, we are holding on to that 25,050 level. And the mid cap index at the current juncture trading in the green, marginally so, but still, yesterday was a down day, but trying to make a comeback here. The Sensex is down somewhere around 115 points or so. Breadth of the market right now skewed in favor of gainers, 844 advances to 651 declines. Let's see, let's wait for that to settle down. before calling a trend for the day. But sectorally, Bank Nifty once again on the back foot, 120-point cut. If you look at some of the other sectors, want to see what pharma is doing because yesterday was a day of comeback for the pharma sector or pharma index, so to say, because last three sessions, Monday to Wednesday, pharma was under pressure. Today, the pharma pack is extending gains, 0.3% kind of gain coming in on the pharma index. Autos are once again in the green. FMCG was in the red yesterday. It snapped out of a 3-day gaining streak. Today, it's mildly higher. Early days to really say what or it will do going forward through the day. IT is in the red. Metal is in the red. Realty marginally higher. So all in all, a mixed picture. But at the current juncture, gains are being led by autos and pharma as well as media pack. I want to mention media pack is up somewhere around 0.5% or thereabouts. Let's take a look at some of the individual movers then. Wipro, it has made an acquisition. That stock is the top Nifty gainer, up 7 tenths of a percent. Aside of that, you have Tata Motors that's doing well. Nestle India, Bharat Electronics also has had an uneven sort of a week, but today it's in the green. M&M, Hero Motocorp, so all these auto names in the green. IndusInd Bank also trading in the green. Remember, Hero and Indus may exit Nifty 50. Of course, an announcement will only come by post-market hours. That's expected. L&T is in the green. ONGC, Maruti, Hindalco, these are some of the other names dominating the gainers list. But what's not doing all that well is ICICI Bank. That's the top laggard on the index. Private banks have had a rough patch and continue to do so. ICICI Bank, as I mentioned, HDFC Bank as well in the red. Life insurers saw some bit of traction yesterday on the back of zero GST on life insurance. The group of ministers or states are in fact on board with that, which is why we saw some traction for the likes of SBI Life, HDFC Life yesterday. Today, SBI Life is in the red. Reliance as well. Some bit of profit taking there. Some of the cement names not doing all that well. The likes of Ultratech Cement, Grasim in the red, even Eternal, under some bit of profit taking after recently hitting fresh highs. Okay, so all in all, the texture is on the downside right now. Let's see whether we manage to reverse course for the day or not. But Raja, what would you do with names like Apollo Hospital? Pharma, of course, has made a good comeback after 3 days of losses. Apollo Hospital, in particular, I want to get in your thoughts on this name. There has been a block deal, 1.3% equity worth 1,489 crore rupees exchanged hands today at 7,850 rupees per share. Now, reports suggest that promoter Sunita Reddy may have sold up to 1.25% stake via the block deal. The floor price was at a discount of 2.3%, but hospital stocks per se have been doing extremely well. And Max Health would also be in focus because it may enter Nifty 50. Any of these names that you fancy?
Yeah, see, Apollo Hospital, yes, it entered into a block deal at 2% discount. But then, when you take a look at the overall trajectory of Apollo Hospital, what I found is that it is an excellent stock to buy on a dip because this stock has shown great resilience and it has managed to always move higher. So every dip in this stock is a buying opportunity. So the dip which you are seeing today, I would say that it's a good opportunity to enter because I see the stock going entering the five-digit mark in the next 3 months. So it's definitely on the positive side. And pharma per se has been able to weather the storm over the last, especially the last 3 months. And this stock is definitely amongst the front running.
Okay, buying on dip should be the strategy, and of course, bullish view coming in on an Apollo Hospital for sure. But let's talk about Wipro. This stock is also in focus. IT, one of these days did see a very, very good rally. Wipro, I want to talk about this particular stock because the company has acquired or will acquire 100% stake in Harman Connected Services for $375 million. Some of the brokerage notes have come out and they say that revenue-wise it will be good, but it could hurt EBIT margin by 50 basis points due to integration costs. That's the view from Nomura. They have a buy call with the target price is at 310 rupees. And HSBC has a hold call with the target price of 260, which is not very far from where the stock is right now. But given the fact that some of these large cap names have already corrected 25-30% from their 52-week highs, would you look at this as a buying opportunity? Is it a good time to get into some of these stocks?
Yeah, IT as an entire industry has been going through tough times, and especially the large caps, they are facing some headwinds right now. So yes, they are trying to re-engineer their approaches, and this attempt by Wipro is in that direction. But then when you take a look at the overall price action over the last 3 months, you would see that there has been a continuous attempt at revival, but then that revival has not succeeded. So those who have capital and time to hold on for the next maybe a year, you could see levels of around 320 to 340, which is a 1 year target. But then if you do not have that patience, then as an investment bet, I would not say that you should enter into Wipro right now.
Okay, that's the view on a Wipro. But we were talking about you briefly alluded to some of these cable names. Today, Finolex Cables is up somewhere on 5.5%, around that 896 mark. Any thoughts on this particular stock? How does it compare versus the Polycab? Any names that's catching your attention here?
Yeah, this Finlex cable, yes, it is trying to revive, but then when you see it has been declining since 2024, and over the last 3 to 4 months, it has been attempting to bottom out closer to the region of around 830 levels. So I would say that today's positive move could be one step in the direction of recovery, but still I would wait and watch because of the extent of decline. I would not take a 1 day action to be a pointer towards getting into this counter. But then if I were to point out something from the cable space, it will definitely be KEI, because KEI has been a very strong contender in, and it has been able to weather the storm across different kinds of market regime, and that's why KEI is a good bet on a pullback as well, and also at the current level. So if one wants to invest into this space, then KEI would be a much better option.
Okay, KEI, a much better option within the cable space. But let's talk about HUL. There's been a management change here. It has roped in former CEO of Hero Motocorp, Niranjan Gupta, as the CEO. He'll be the CFO, I beg your pardon. He will be the CFO designate from the 1st of September, and he takes over the reins, from the 1st of November. So all of these FMCG names on the back of the GST booster shot have been doing well. Yesterday, we saw FMCG snapping out of its gains. Today, I think the stock is in the red. But last three sessions, we saw gains, right? How would you trade into an HUL from the large cap FMCG names?
So when you take a look at HUL also has been in a similar trajectory, and over the last few months, it has been making an attempt to come out of its sluggishness, and this is clearly reflecting on the price action also. And I would say that the bearish scenario which was prevalent in HUL is has come to an end, and it's also followed up by change in the corporate governance structure. So now there is a change in the management. There is also a positive, shots from the government. So overall, the FMCG industry itself. So over the last 2 weeks, we have seen that the FMCG has also been one of the strong movers. So I would say that HUL is looking forward to some better tidings. I see a target row zones towards 2900 possible over the next 3 months. So one should look to participate in this counter, and a dip towards 2570 also would be a good region to enter.
Okay, that's the view on HUL. But let's now shift focus to some queries. I want to take up this query on UTI AMC by Yash Sampath. Would you say that what's been happening on the FNO end, would that be like a shot in the arm or whatever, or could AMC stocks be a beneficiary of that? Because the likes of BSC discount brokers, they will be impacted. But could this be an opportunity for getting into stocks like UTI AMC at the current juncture?
Yeah, see, amongst the AMC, the financial stocks or the wealth management stocks, only HDFC AMC has been able to show a very strong performance, while the likes of UTI AMC have only been able to show a mild rise. So at the current juncture, also, I would say that if those who have if you're currently holding the stock, then it's a good time to book some profits, look for lower levels to buy into. So now the next question will be, where will the lower levels be? I would say closer to the region of around 1200 would be a good opportunity to enter the stock.
Okay, that's the view, and that's the level where you can enter. Yash, I hope that answers your query. There's a query from Harry on Saman Housing or Saman Capital, but I think he wants a fundamental view. But let's look at the stock from a chartically. In the last one
Sorry.
month, we've seen 10% being shaved off. Any thoughts or any levels that one can look at if they are, wanting to enter into this stock?
Yeah, see, the way the stock has been performing, it's not been giving much confidence right now. And I would say that if one has to look at this counter and participate, one should wait a while. One can hold on to your position, but do not add at current juncture.
Okay, hold on to position, but do not look at adding at the current juncture. Let's take up a query on Adani Green as well. This stock is out of favor today. Last 5 days have been okay, but hasn't been doing much over the last month or so. This query is coming in from Mukul Vaidya, but he wants your thoughts on where the stock is headed over the next 1 month.
Yeah, Adani Green, once again, yes, it is in the energy space, and certain energy stocks are doing well. But then Adani Green, I can definitely say that the stock has, is done with a decline. So this could be a good time to consider adding to your position. So the addition levels would be closer to the region of above 1055. So where I would be more comfortable in adding to the position, because yes, the stock has been attempting to rebound, but then that is a level which I would watch out for, where I know that the stock is beginning its new journey.
Okay, that's the view on Adani Green. I hope that answers your query. You want to take up a query on a coaching shipyard. This one's coming in from Manish Kumar. The stock has been sideways in the last 1 month. Of course, some of these shipbuilding names have seen a good correction as well. Does the risk reward now look at least within comfort zone, or would you say it's still skewed? And how would you look at a Mazgaon dock as well in that light?
Yeah, I would say that the defense stocks have lost its sheen, and I would reiterate that yes, people still continue to get enamored by the defense stocks, but I would say that one should rest. Right now, even when you look at Cochin Shipyard, it's only been in a correction phase over the last 2 months, and the selling is not stemmed off yet. So one should be very wary of entering this stock right now, because yes, it is at a support, but then I would say that there are better candidates to consider. So be it Cochin Shipyard or Mazgaon Dock, or BDL or BEL or HAL. So yes, these defense names did attract some attention earlier, but I would say that there is a pause in the news triggered moves in these sectors. So I would say that shift your focus to some other sector.
Okay, defense pack, of course, according to Raja, has lost its sheen. So perhaps you could look at shifting to some other space. But let's talk about a query on VA Tech Wabag. Wants to know whether this stock is looking good, or is there any other stock in this sector that is catching your attention? This stock, VA Tech, uh, I think it has kind of lost some of its mojo in the last month or so. Can't see any big moves. How do you approach this particular stock? If not this one, then any other, any alternative?
Yeah, this stock has actually been in a consolidation phase, but then I would say that the stock is eventually coming out of that phase, and this could be a good time to add to the current levels if possible, because I see an upside emerging in this counter, and it has got room up till 1800, which is possible. So once the current levels of around 1650 is exceeded, so above 1650, it opens up a 10% window. So which is a good possible traction, which can emerge in Vatek Baba.
Hmm. Okay, Alex, I hope that answers your query. Here's a query on Swiggy from NP Gandhi. Swiggy has seen, good moves in the last five sessions. Eternal, on the other hand, also hit a fresh high, but it did came under some bit of profit taking after its record levels. Particularly for Swiggy, what kind of levels should one work with? For the short term, say 2 weeks or a month, and for Eternal, what are your thoughts? Do you think 400 is on the horizon?
Yeah, the quick commerce space is definitely an encouraging one, and we are seeing Eternal, especially after Eternal's numbers, we have seen a good traction also, rubbing off on Swiggy, and the move in Swiggy is just starting, just like it happened in Eternal. So there is a catch-up movement happening in Swiggy, and I would say that this is a good time to consider because constant rounding patterns are also getting formed at lower levels, which is a sign that accumulation is happening, and this could be a good time to consider because I see a target of around 500 possible within the next 3 months. So it's a good stock from a short-term investment play.
Okay, that's the view on the quick commerce basket. There's a query from Gitu Sandesh on Algo Quant FinTech. Now, this stock has really been hammered out of shape. Last five sessions, 15%. The stock has been under a fair bit of pressure. If somebody is stuck in this stock, what should they do?
Yeah, considering the nature of move which we are seeing right now in this counter, one should, at least exit partially and wait for some rally to exit the balance. Because yes, there are certain news flows which are visible. There are certain news flows which are not. So maybe there are certain more news flows which may come out later. So it's best that one exits and partially and then moves on to some other counter.
Okay, that's the view. Gitu, I hope that answers your query. There's a query on one of the Tata stocks from Anandaroop Bandyopadhyay. He wants to know what is the prospect for Tata Elxsi. Tata Group stocks have kind of lost sheen in 2025 so far. How are you viewing some of these stocks? And particularly for Tata Elxsi, is there a case for investment at the current juncture?
Yeah, like I mentioned earlier, the IT stocks are under pressure. IT stocks are facing a lot of headwinds and the continued pressure, and especially Tata Elxsi, the secondary IT companies are under a fair bit of pressure. And Tata Elxsi has been leading the declines for a last almost 2 to 3 months. So the current juncture clearly says that one should not consider it from an investment perspective. It's more of a trading perspective and also on the short side.
Okay, that's about Tata Elxsi. I hope that answers your query. But with that, we've come to the end of the query segment, Raja. I would like to thank you for joining in, sharing your thoughts, sharing your recommendations, helping our viewers navigate their stock-related positions as well. And I look forward to having you again on the show. But wish you a very happy weekend. And
Yeah.
of
Thank
course,
you.
with the truncated week next week, hopefully, we will continue our winning streak as well going forward. Thanks a lot for joining in, Raja.
Thank you. Bye.
Bye. On that note, could you take a look at what the markets are doing? In fact, we have slipped even further. We've broken below that 25,000 mark, a triple digit cut coming in on the index, 120 point down. For the Nifty, Sensex is now down almost 400 points. The mid cap index is managing to outperform the headline indices, but still, even this index has slipped into the red. We're seeing a 0.5% cut on the Nifty Bank index as well. The breadth has now, been skewed or is now skewed in favor of laggards, and firmly so. The NSE advanced decline ratio is 1:2. 799 advances to 1638 decline. So not turning out to be a very happy Friday, but let's see whether we kind of give up this weakness and try to stage a rebound later on in the day. It's not even been like an hour of trade, uh, or even half an hour for that matter. Let's see if things really settle and we stage a turnaround as well. But viewers, before we get our next guest in, just want to share a message with you. If financial freedom is your goal, then Super Pro is your superpower. In fact, get live trading and investment ideas from SEBI registered experts, pre-identified chart patterns, and AI-powered stock alerts on WhatsApp, all in one. And right now, with a special financial freedom offer, you can get the annual plan for just 2,499 rupees, and it's down from 7,499 rupees. So yes, a very good discount at play. You can avail of that. Download the Money Control app and subscribe today. All right. Of course, we're not turning out to be a great Friday morning after six straight day of gains. But from a longer term perspective, how is the setup looking like? What are the next set of headwinds for our markets, and how should one really navigate, and what kind of expectations one should have from uh, the market in terms of returns for this year. Let me bring on board our guest for today. Joining me is Nikhil Khandelwal, Managing Director at Systematix Group. Nikhil, lovely chatting with you. Welcome to Money Control. I think this is the first time I'm interacting with you on our show. But just want to get in your sense on where we are headed from here. There's been a spate of good news domestically. Of course, globally we have quite a few headwinds to deal with. But domestically, there's been the GST reform. There's been an S&P upgrade as well. uh, are we poised to make a dash at fresh highs, given the fact that we've seen a very good rally coming in the last week or so?
Hi, good morning. Thanks for having me on the show. Yeah, I think the last 1 year has been quite volatile for markets. We have seen that, we defined the last year as, a broader slowdown in economic momentum, or what we saw across government capex slowing down, the tariff situations over the past few months, and especially over the past 3 weeks or so, has not been supportive to India's exports, as well as even on the domestic front, the banking as well as the non-banking sector, there has been broader slowdown in credit activity. As a result of which, over the past 12 months, we have seen that the capital markets have relatively been flat. In fact, except for the last 1 week of market uptick, the market cap erosion has been to the tune of almost 30 trillion rupees, which is close to about 15% of household income. So from a market perspective, I think except for the last 1 week of gains, the market has been quite flat. However, the markets as they are, they start to look at things which are in present and in future. So definitely there are a lot of winds of change, whether from a domestic consumption boost, whether from a rural economy picking up, as well as government's increased focus on domesticating a lot of industries, and focusing on made in India and make in India. So combination of that, there are several green shoots which we are beginning to see, and I think that is beginning to reflect in the markets. We also are of the view that with all the correction which has happened over the past 12 months or so, the markets valuations are now below pre-COVID levels. So in the entire setting, when we see where the valuations are, it starts to become quite interesting from a long-term investor point of view.
Sure. Of course, you mentioned the valuation point, but we've seen FII community pull out a sizable amount from the Indian markets. Given the fact that we are better placed in terms of growth, compared to the EM peers, although market returns wise, we haven't really been able to outperform them this year. But would you expect FIs to return anytime soon, or would you say that they are still uncomfortable with the valuations we are commanding?
No, I think the FII flows are something which we believe remain, in a 2 years of strong inflows, 1 year of weak inflows. It's a trend which they follow, and it
Hmm.
happens with kind of the global economic macroeconomic situation, with India actually being the most tariffed economy in the world. It's very obvious that some of the large foreign investors will sit on the sidelines for the time being. So as the tariff situation starts to kind of play out, maybe kind of cools off,
Hmm.
and I believe even the Indian economy, the domestic market growth, and the earnings growth momentum starts to improve. With those things kind of playing out, the FII flow should begin to come in. Having said that, I think the domestic flows in India, we are seeing that they have doubled over the past 2 years. The monthly SIP numbers are as strong as ever. The number of alternate investment funds putting long-term money into Indian capital markets is increased by almost 3x in the past 12 months. So a lot of that data, which is from domestic investor point of view and domestic capital point of view, flowing into markets is quite heartening. So the
Hmm.
FIIs will trickle in, but the domestic capital should continue the markets, and the flow is quite strong.
Sure, since we are talking about domestic flows in equity markets and etc., let me getting your thoughts on the big talking point right now. SEBI will come out with a discussion paper on longer tenure for FNO derivatives. Of course, the likes of BSC, discount brokers, they are staring at revenue hit, because of volume loss. So, how would you approach these names now? And within the capital market theme, do you think it's a golden opportunity for AMCs, that end of the capital market theme?
No, actually, the SEBI has been talking about this whole derivatives market point for a while. I mean, as the data goes, as many of you may be aware, India is just about 4% of the global market cap, but accounts for almost 60% of global equity derivatives volumes. And as SEBI has been throwing the data about the retail investors making significant losses, sometimes some number like 45,000 crores in the last financial year. So SEBI has been worried about it. They've been clamping on many instruments. They've been limiting contract expiries. They have raised lot sizes, and hence the cost of trading in options over the past few quarters. So this move, of course, which can lead to potential taking off of weekly expiries, that can be quite an impact on the overall derivative volumes. To answer your point, the for discount brokers, I believe the data goes that about 80 to 85% of their revenues come from derivative contracts or derivative trades. And a large part of derivative trades which happen in India is in the weeklies. While SEBI clamping down on weeklies might lead to people shifting to fortnight and monthly contracts, but there will be a sizable impact on the volumes which happen in the discount brokers. So definitely they will be more impacted than the regular wealth focused brokers, or I'll say the more brick and mortar players. On the exchange front as well, we believe that BSC as an exchange garners a larger volume or larger part of their revenue from FNO trades, and hence
Hmm.
BSC may be impacted more than NSE. Although for both the exchanges, the revenue from derivatives is close to about 50% or so. So definitely there would be an impact on the revenue and profitability of the exchanges, but more on the discount brokers. The
Hmm.
details of the SEBI paper, etc., is of course yet to be seen, but most likely based on our market chatter, it is moving in the direction where weekly expiries may be taken off.
Sure, of course, evolving, and we'll be watching out for the discussion paper as well when it comes out. But let's talk about sectors now. Consumption, of course, that's the big theme now. We've had tax cuts, in the budget. We've had RBI rate cuts, of course, now with the GST rate rejig, and we have the eighth pay commission as well around the corner, right? Do you expect consumption to pick up meaningfully? And do you think consumption-centric names are poised for a very strong second half? Also, what do you really like within this universe? It's a very broad universe. So, what are your preferences also in the consumption space?
Well, we have been quite positive on the rural theme in general over the past couple of quarters or so. We were seeing that the government capex in infrastructure was going down, but government, incentives and benefits which they provide to the rural households, that has been, trickling down quite well. Fortunately, the monsoon situation has been quite strong, as well as the general gold financing, etc. actually also helps the rural household. So combination of that, we have seen that the rural market has been showing strong volume growth. This started to show in Q4 and in Q1 as well. So we continue to remain quite strong on the rural theme. GST, the announcement by the Prime Minister on 15th of August about GST rate rationalization. Again, while that is a big hit to the exchequer in terms of their revenue loss, but it is a broader positive for the consumption economy. We believe this GST rationalization, and the details of which are already coming in, will have the
Hmm.
biggest impact on Indian consumer economy than any other tax announcement which has been done by the government in the recent past. So definitely the consumption economy, especially the packaged foods, the more affordable housing, the affordable retail, those themes start to become now extremely critical. For us, the rural as well as the consumption market starts to look extremely promising from not just a little to medium term, but even from long term. Uh, from our perspective, the government's GST reduction to 5% on packaged foods, etc., is likely to give a positive boost not just to large companies like Nestle, HUL, etc., but even to
Hmm.
the smaller beverages names, even dairy companies like Dodla, Varun Beverages, etc. The auto
Sure.
sector will see a significant positive especially on companies which manufacture two-wheelers or small cars like Maruti or Hero, but also to the farm-dependent automotive companies like Mahindra and Eicher. So it's actually having a broader impact on the consumer economy.
Hmm.
And so yeah, I mean, lot of positives for the consumption pack as a large. So we
Sure.
remain positive on agri and consumption for that reason.
Right, but I can see that you are also structurally positive on capital goods, and data centers is another end that you really like as a long-term theme. Can you explain the rationale here? Because the government focus seems to be shifting now more towards consumption from capex.
No, if you see, India actually has been one of the fastest growing markets in terms of moving to alternate energy. So from that point of view, India has taken the lead, I'll say, in the past 5 years, as far as investment in creating the right infrastructure, the right incentive for the alternate energy market. While which is actually quite visible in our wind as well as the solar energy sector growth. So if you see any of the large players in this sector, whether it's the Suzlon or the Inox in the wind side, or the Varis and the Premier Energies on the solar side, that has actually seen strong growth momentum. The entire ecosystem of the power evacuation is also has been a big focus for the government. So we are seeing a significant capex happening on evacuation of power, which is extremely critical as your power needs of the country grows. So we remain quite positive on the larger power sector, because the overall investment in power evacuation as well as power generation and diversification of power has been done in a very methodical manner over the last 5 years. significant backward capacities have been created in this sector. So, and the power need of the Indian consumer is growing as we move towards, more technology intensive power needs like data center. That power needs are going to spiral even for further. So, overall, the power sector, which comprises of the power producers, the evacuators, like the transmission and distribution companies, as well as the equipment manufacturers, which are the transformers, reactors, etc. All the people in the chain will benefit significantly. We hence remain positive on that. India is also one of the few countries which is extremely focused on ensuring that the data which is of the Indian consumers data remains within the country. So they are
Hmm.
asking some of the larger overseas e-retailers also. I'm sorry. To ensure that all of the data of the Indian consumer stays within India. So that is leading to a significant investment in data centers capacities in India, not just by the
Hmm.
global biggies like the Googles and Amazons, but even the Indian companies. So as a result of that, our belief is that the data centers industry and the cloud infrastructure industry in India will grow significantly. There aren't many companies in the listed universe who focus on this as a big focus area. So we will see a
Hmm.
lot of new companies which will now come to the market for through new listings. But L&T has invested in this company called E2E Networks. There is a company called Anantraj, which is actually
Yeah.
investing a significant amount of capital on data centers. So combination of these and many more, which will come to the market, will fuel a lot of action in the data center in the coming years.
All right. Just a few more questions then, Nikhil. Tell us, we've had a fairly subdued earnings season, this first quarter. But looking at the commentary, looking at the outlook from companies, which are the pockets that you would advise investors to avoid at the current juncture?
Um, well, the um, in our view, the government capex will be something which will remain a mixed bag. The government
Hmm.
capex on infrastructure, as a loss to the exchequer because of the GST impact. As I mentioned, about 50 to 60,000 crores of revenue loss will be there to the two states and center combined just because of this development. Uh, the infrastructure related investment areas like roads, water, some of these areas may take a little bit of a hit. In our view, companies which are significantly dependent on state funding for roads and water, those sectors should be avoided at this point of time. The luxury retail segment also is something where we believe that the theme has played out quite well. And
Hmm.
while Indians are, always looking to invest more in their luxurious spend, we believe that growth in that luxury retail category will be something which will be subdued over the next couple of years. So luxury retail, as well as the infrastructure sector for us will be something which we will avoid for at this point of time. While this US situation on tariffs, etc., remains a little bit of a challenge, this is, in our view, going to impact our textile sector numbers in the
Hmm.
medium term. So, textile sector also, we believe, for the next couple of quarters will throw a little numbers on the negative side. So, textile sector also is a larger negative for to us for the near term.
Sure. Okay. Those are all the pockets that one should avoid at the current juncture. But talking about systematics per se, yours is of course a listed company. Just want to understand how are you guys also placed in terms of growth and margins going forward?
Well, Systematics, we primarily operate in businesses focused on institutional and HNI clients. We run a brokerage, investment bank, wealth, and asset management business. We operate in a business, where our largest cost is people and technology. Last year we generated a revenue of close to about 170 crores on a profit of about 60 crores. And we are growing our asset management and wealth management business at quite a rapid pace. From our viewpoint, we have been a 35% CAGR business over the past 4 years, with an ROE, ROC in excess of 20, and we expect to continue to grow that way.
Hmm. All right. And you guys are also coming out with an MSME focused fund. Can you give us some more details about that as well?
Yeah, as a house, we have been a company which has been focused on working with medium and small enterprises on whether on research, on their investment advisory, or even in terms of our investment mandates. We believe that MSMEs are a backbone of economy. They generate maximum employment, and are actually generating a significant amount of innovation in the country. As a result of that, we have just launched a very unique AIF Category 1 fund, which is going to focus on investing in medium and small enterprises, which are at a late stage of their growth and are likely to
Hmm.
go public in the next 3 to 6 months or up to a year. So it's like a pre-IPO fund, but focused on MSMEs,
Hmm.
which is a very unique category in itself. So quite excited about that. We are just closing that fund in the next couple of weeks, and hopefully you hear some developments on investments from us from next month onwards.
All right, point taken. Of course, that's a new fund that's coming out of the Systematics Group. But lastly, just 5 more months to go for the year to end. Have you made any changes to your return expectations for the market? It hasn't been like any other year, and expectations are far muted. But would you at least see a high single-digit return for the Nifty, given the fact that we've had a spate of reforms and the government really, pushing the pedal when it comes to reforms? How would you look at how we are poised to end the year?
No, I think as Indians, we are ever optimists, but most importantly, I believe, the consumption side of economy is what drives India, what world sees as India, and what world needs to see India as is our Indian consumption and our Indian consumers. As we get more strong, starting from rural and all the way to the middle and higher middle class, which is happening through a lot of the factors which we discussed. so
Hmm.
so you know as those data start to play out, and I think that overall consumption boost happens very close to all this festive season. I believe the next 6 months in particular will be quite strong for the Indian economy as a large.
Sure.
And
Point
we should
taken,
see
Nikhil.
in our view probably 5 to 7% gains in the index as on
Hmm.
March 26.
Okay, taking your point, 5 to 7% kind of return from the index by the end of FY26. But with that, Nikhil, would like to thank you for taking out time and sharing your thoughts and perspective with us. Appreciate your taking out time, and I look forward to more conversations as well in the future.
Thank you, pleasure. Thank you.
Thank you. Thanks a lot. Well, on that note, let's take a look at what the markets are doing. We are where we were at when I last did a check on where the markets were. It's down 120. Below that 25,000 mark, 24,960 is where we are at. But the mid cap index is trying its best to stay afloat in the positive territory. Right now, it's just about 30 odd points up, the mid cap index, and the breadth as well, skewed in favor of laggards. So, yes, if you look at the losers list that's far longer than the gainers list today. The losses are being dominated by the likes of Hero Motocorp, Grasim, HCL Tech, Asian Paints, SBI Life, some private banking names like ICICI Bank and HDFC Bank. These are also not doing all that well. The slim list of gainers being led by Bharat Electronics, that's the top Nifty gainer, just about 1.5% higher on that stock. Bajaj Finance up 0.5%, Sun Pharma, M&M, Geo Financial, and IndusInd Bank are some of the stocks that are managing to keep afloat uh, on what is turning out to be a weakish session as of now. But let's see if we can reverse course. But for now, it's a 0.5% cut on the index. We have snapped out of a 6-day gaining streak. But as we end, viewers, if financial freedom is your goal, then Super Pro is your superpower. Get live trading and investment ideas from SEBI registered experts, pre identified chart patterns, and AI powered stock alerts on WhatsApp all in one. And right now, with our special financial freedom offer, you can get the annual plan for just 2,499 rupees, which is down from 7,499 rupees. So a very good discount. You can avail of that. Download the Money Control app and subscribe today. Well, with that, we've come to the end of opening bell. Not turning out to be a great session, but hopefully things would have turned by the time I join you again at 3:30 p.m. on closing bell. Don't forget to tune in, and till then, stay tuned to Money Control for all your other news and updates. I'll see you soon.